Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. It's a choppy day in trade. We are 17 points higher on the Nifty. We've seen a lot of fluctuations today. The mid-caps continue to do higher. But, after the handover that we got from Wall Street, the indication was maybe we could continue, be at that 26,000 mark. But the markets are like, wait for a bit.
That's right. The wait for 26,000 on your screens is just getting a little delayed. Given the fact that we actually seen a very strong handover as far as Asian markets are concerned, Indian markets today seem to be relatively underperforming, especially the broader end of the indices. But quite a lot lined up on the show. Let's start off with the top headlines. Market recovers from the day's lowest point, but trade in a range. Nifty hurls firm about 25,900, led by metal stocks. Midcap index also hovers near the 60,800 mark.
Metals perk up after China's central bank chief Pan Gongsheng points to a 50 basis points cut in reserve ratio and a cut in interest rates. Also promises lower rates for mortgages, even as reports suggest a recapitalization of banks is likely.
SH Kelkar fires up in trade with gains of over 12% as Kotak Institutional Equities reinitiates coverage on the stock with a buy rating. The brokerage sees a long runway for growth for the company.
GMR Power and Urban Infra gains in trade. MK turns bullish and initiates coverage with a buy call. The brokerage believes that the company's coal thermal assets are nearing optimal performance.
AstraZeneca Pharma surges more than 10% after the company receives the CDSCO nod to sell and distribute Imfinzi, a drug used to treat a type of cancer. Well, good afternoon and welcome to Midcap Radar. While we are looking at the markets currently, like we just mentioned, like you just mentioned, Sonal, it's been quite a choppy session of trade. Quite a few stocks on the radar in terms of, seeing significant upside as well as downside. The metal pack today is doing very well. Look at names like SAIL, Tata Steel, JSW Steel. All of these stocks actually doing quite well. On the other hand, amongst the broader markets, IEX is one stock that's seen quite a bit of selling pressure. But a whole host of stocks is what Hormaz has on his list today. He's standing by the wall. Hormaz, which are the list of top movers in the broader end of the markets?
Well, it's more on the downside than on the upside, even though the mid-cap index is still holding on above the flat line. But IEX, as the stock that you mentioned, is the top loser within the broader market space. We just had a block deal a few minutes back that took place in the stock as well. 10% lower now, at one point was down almost 11.5% is IEX. PB Fintech is seeing some bit of profit booking after a one-way move over the last 1 month, 5% down there as well, and some bit of selling pressure coming in for mid-cap IT names as well, like KPIT and Zensar. But metals are the stocks that are doing well today after the stimulus measures promised by China, with almost all the stocks within the Nifty metal index seeing healthy gains of anywhere between 3.5% to almost 6%. Some brokerage commentary came in on a lot of these names earlier this morning, and SH Kelkar was one of them, 15% higher now at the highest point of the day. GMR Power also with the MK note locked in a 5% upper circuit, and Ipca Labs off the highs of the day but holding on to gains of 2%. And lastly, stocks that are doing well on the back of very strong volumes, and AstraZeneca, as you just highlighted, 12% higher on strong volumes. Sapphire Foods after the block deal. First Source Solutions having a good day today, as is Godavari Power and Ispat, 7% higher on very strong volumes, in line with the surge in the metals pack. Back to you guys.
Okay, all right. Thank you so much, Hormaz. There's some interesting names out there. The advance decline ratio is absolutely flat. We have equal number of advances for the number of declines that we're seeing in the broader space. It's a good time to welcome Shrikant Chauhan, EVP Kotak Securities, for a technical check on the market. Shrikant, good afternoon. What are the trends suggesting right now? Do we see an up move in the last 1 hour of trade? We do have the financials expiry as well today.
Yeah, good afternoon, Sonal. Good afternoon, Vivek. Well, for Nifty, I think it is very clearly heading higher. Whenever there is a correction, we are seeing buying interest, and most of the time, whenever there is a recovery, we see buying interest in large cap and mid cap companies, which are like part of index. So broadly, I am of the view that the markets are heading for the next levels of 26,200, and 25,800 is now going to act as major support for the market. So that should be the final stop loss on a closing basis for creating any long positions. For Bank Nifty, I think there also we are seeing upside, and 54,500, 54,600 should be the next level to watch out for, because the way it is consistently holding above the levels of 54,000 and 53,900, I think this particular bank Nifty is also heading higher. I think most of these indices are very close to their about their important resistance level, and I think in next few 1 or 2 days of time we are going to see further more rally in the market.
Good afternoon. So what are your top individual trades for the day?
Yeah, Vivek, I think metal stocks are really doing well, and most of these stocks have spent a lot of time, and most of these stocks have formed some consolidation, continuation formation during their previous underperformance. So I'm of the view that Vedanta should be on the radar because the stock has formed triangle formation after rallying a lot from the levels of 200 to almost 500. So now after this breakout, I'm expecting stock to move towards 500 or 520. So Vedanta is a buy at current levels around 469, 470 levels. We can keep stop loss around 454 for the target of 500, 520. And the other stock on which I'm bullish is CESC, Kolkata Electricity, which is currently trading around some 202, 205. There also I'm seeing some breakout sort of formation and continuation formation. From current levels, the stock can move to the levels of 225 or 230. And also all these particular stocks from the same group, they are really doing well. So I think that momentum will also help the stock to do well. It's a buy around current levels with a stop loss close to 193.
All right. Okay. Thank you so much, Srikanth, for joining in with those technical bets. It's time to slip into a short break. When we come back, we'll connect with Murli Malayappan, the chairman and MD at Shriram Properties, to discuss the FY25 outlook and the long-term targets as well. Stay tuned. Welcome back. You're still tuned into Midcap Radar. Shriram Properties, that is the stock on our radar. The stock has surged more than 40% in the last 1 year. The company in its long-term targets aims to double its sales, triple its revenue and quadruple its profits over the next 3 years. To discuss how do they plan to achieve it and more, we have Murli Malayappan, the chairman and MD at Shriram Properties. Mr. Murli, good afternoon. Thank you so much for joining in. I wanted to understand the longer-term targets is something that the street seem to like as well. For now, I wanted to understand, since Q1 did see some weakness because of that Pune project approval that didn't come through, where are we in terms of approval there? Has Q2 been better than Q1? And are you on track for those 3 project launches that you had indicated earlier as well?
Yeah, absolutely on track with respect to the launches. 3 projects out of which, 2 are in Bangalore, 1 in Chennai, all on track. And as we speak, 1 project already launched and received good success. The other 2 projects, EOI process over, and we should be able to get this done before 30th September. And project launch is on track. Pune project approval still lost mile pending, so it will not happen in Q2, but it is likely to happen in early Q3. So it is on track with respect to all the new projects. For the full year also, new projects is on track for launches. We have close to about 11 projects for the year. And for Q3 and Q4, the project launches are on track.
Okay, so the Pune project, you expect the approval to come by in Q3. What is the revenue potential here, the sales potential, and what would the execution timeline be on that project once approvals do come in?
It is over about 1,000 crore is the overall gross revenue of the project. And project timeline could be about 3 to 3.5 years time completion from the approval timelines.
Okay, Mr. Murli, talk to us about the AIF platform that you have currently with ASK. So what is the current status of that? What has been the commitment so far? And we also understand that there's an early closure over there. So can you give us a sense of what exactly is happening on that particular platform?
It's a 500 crore platform, out of which 2 investments have been done. One investment, they got an exit now recently. There is a project in Bangalore. It's a plotted development. The project has done phenomenally well. They just got an exit a couple of months ago. And another project in Chennai, which they have investment in there. They are also exploring we are exploring together. We can do another 500 crore platform. We are exploring together on again investing into the core markets like Bangalore, Chennai, and Pune.
Okay. So you are looking at the Kolkata market in a big way as well. That is something that you said in your outlook coming in for the next few years as well. You said Kolkata will remain a key contributor. So I wanted to understand what is the plan here? There is some monetization that you were planning here as well. How big would Kolkata be as a part of your overall pie in the future?
Kolkata, we have deliberately decided that we will not do any addition. The existing project has a potential of about 6 million square feet, out of which close to about 10 million square feet is already under construction now in various stages. The balance will get delivered in the next 6 to 7 years time. Apart from that, we have got quite a lot of land parcels with potential built-up area, which we'll look at monetizing. We'll hope to monetize this in the next 3 to 4 years time. And we are not adding any new project in Kolkata.
Okay. Mr. Murli, you've given a very strong guidance as far as, the next 3-year pipeline is concerned, double sales, triple revenues, quadruple profits. Now, when we talk about the next couple of years, how is the project mix going to look like? Will it largely be driven by affordable housing? You also have significant plans as far as the luxury segment is concerned. So how will the project mix change like, especially over the next couple of years, FY26 onwards? What will be the kind of launches that we can expect?
Currently, last 3 years time, what we have done is mid-market, it is about 67%. It is likely to go up to close to about 75 to 80% in mid-market segment. Next 2 years outlook will be completely mid-market. We have moved away consciously from affordable housing. We were dominant player in affordable housing, but we have consciously moved away from affordable housing. Will be mid-market and mid-premium segment. That will be our focus. Close to about 80% will be in that category, some portion in luxury category, some portion in commercial, maybe a small portion in affordable. So that's where in the next 2 years time we are looking at now.
Okay. Mr. Murli, I was looking at the debt now. You have a platform with ASK around 500 crore rupees. The debt also is something which is used for the future capex that you have. 482 crore is the debt and it has been increasing. In March 2022, you had 341 crores of debt. What is the plan with debt reduction? What is the breakup of debt from NBFCs and banks? And what is the cost of debt right now?
As we speak, it is at 460, from 482 it has come down to 460 net debt. Net debt equity ratio is 0.37, is one of the lowest in the industry as we speak today. With respect to the overall debt reduction, as the projects getting completed, whatever the projects the debt is sitting there, all the debt is related to only working capital. There is no land acquisition which is happening through debt. Hence, as the project gets completed, this debt will come down. It will become, net debt will become zero of the projects which are getting completed. As we add up new projects, the new project related debt will keep adding up. That's again restricted to only the construction finance. With respect to, sorry, go ahead.
No. So, Mr. Murli, I wanted to understand that these new projects that are coming, the cash flows are enough to repay the debt, the cash flows that are expected from these. So what kind of cash flows are you expecting? Because that would be an important number for any investor.
Cash flows not only good enough to repay the debt, we are also likely to generate good, healthy cash flows over 200 crores in the next 3 years' time. So over and above this debt repayment for the current projects.
Okay. Mr. Murli, thank you so much for joining us. Thank you so much for answering all of our questions quite patiently. We'll have you once again, once you deliver your Q2 results, and also we await you launching the Pune project soon. Let's now slip into a short break. Up next, we will focus on SH Kelkar in our Midcap Spotlight segment. Stay tuned.
Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. This is our special Midcap Spotlight segment, and the stock that we are tracking today is SH Kelkar. It's a strong move that we are seeing on the stock today. That's because Kotak Institutional Equities has reinitiated coverage on the stock. They have a buy rating with a fair value target of around 400 rupees a share. They see a long runway for growth given its established and sticky relationships in the growing Indian market. Now remember, it's a fragrance player, and that is where they have been growing even in Europe, Southeast Asia and US. So the export market also continues to be very large for them. There's a high entry barrier that we see in this industry, and this is something which makes it an attractive player in this particular industry. They see potential for margin expansion because of number of reasons: growth in high margin geographies like Europe, there's operating leverage, as well as strong cash flows that the company has seen because it's a asset light model. In terms of growth, for the next 3 years, they're expecting 12% revenue growth, 17% EBITDA growth, 28% EPS growth. And this is something because they have also won a large order from the Unilever brand, which boosts Kotak's confidence as well in the company's growth prospects going forward, and management guidance over 12% revenue growth over the next few financial years. However, there are some risks. They talk about slowdown in the broader economy that crimps consumer spending. Then people will not spend here because discretionary segment is something that takes a backseat in that case. There could be execution slippages as well, especially in these newer contracts that Kotak is worried about. But overall, they are quite bullish, already at 300, and the target for the stock that they have is 400 rupees a share.
Well, thank you so much, for breaking down this particular report, and the stock is doing very well, up almost 15%, strong volumes as well. But there's another report that's come out on GMR Power and Infra, and I've been tracking that particular name. Today, MK has initiated coverage on the stock. Remember, the stock is locked at the upper circuit. So what is it that MK says? MK says that, number one, the core thermal assets of the company are doing very well. It's nearing optimal performance. Remember, they have close to 1.65 gigawatt of thermal capacity. They believe that key triggers over here in the thermal space can be coal tie-ups, PPAs to the tune of almost 90%, and PPAs, remember, long-term capacity. They also believe that debt metrics here have improved quite significantly. They also feel that the hydropower asset of the company, that is a 180 megawatt Bajoli-Holi hydropower asset, has now largely stabilized. Along with that, they believe that the company has significant opportunity and optionality size as far as the smart metering opportunity is concerned. 7.5 million smart metering installation contract opens up a lucrative asset-light business opportunity with Bosch, is what MK feels. Now, what is it that they're saying? Clear focus on deleveraging on the back of strong operating cash flows, and deleveraging has been led and aided by conversion of FCCBs into equity and handover of Hyderabad-Vijayawada road project. They believe that the net debt is expected to drop by 4,000 crores to 9,000 crore in FY25. No wonder then, they're quite bullish as far as GMR Power is concerned. The stock, remember, has done very well in the last year, and today perched at the upper circuit. That was GMR Power. Another stock in the power sector that we are looking at, significant price damage seen over there. The stock that we're looking at is IEX, and today the stock has actually seen sell-off of almost 10% intraday. And again, if you look at it, almost 10.5%, the stock now trading near the 214 rupees per share mark. But with that, it's all the time we have on this edition of Midcap Radar, Mutual Fund Corner, when we return.